All right, let's go ahead and get rolling here real quick. Hope you guys are all having a great night. It's our Sunday evening session. Welcome everybody to the live trading room where we're going to go ahead and get rolling. Taking a look at the futures setups for this coming week. Gary, what's up from Fountain, Arizona? Is that what it is? Fountain? I've never been in. I know Fountain Hills, Arizona, but I don't know Fountain. So good to have you. Welcome to the party that is Sunday night. Oh, Fountain Hills. All right, I do know Fountain Hills. So all right, well, let's go ahead and get started with this evening's session. This is our Sunday night session. For those of you that this is your first time joining us, we pretty much like to go through futures from a big picture perspective. Whether you're watching us on YouTube or you're watching us in the Zoom session, please feel free to use the chat. I have both chat windows open. If you're in the Zoom room with us and you want to use your microphone, please feel free to do so. Just type it in. Let me know that you want to jump in there. So we're going to go ahead and get rolling. And I want to start off real quick by doing a major market comparison. And the reason I want to do a major market comparison is because we did one last week. And the thing that this major market comparison told me last week was that we saw the Russell as our leader, followed by the NASDAQ, then the S&P, and then the Dow, right? That was the one that we had. So looking at that, let's start with, I want to take a look at the last 1 month comparison. Now, this is a 20-day, 1 month comparison. So over the last 1 month, the S&P is our leader, followed by the Dow, followed by the NASDAQ, followed by the Russell. But if I shrink that down, if I shrink that down and I go, and I just want to look at the last week. All right. When I said it wrong, did I not look at them properly? I'll go back and do it again just to make sure. Oh, wrong order. I apologize. The last week we saw the Russell showing weakness, down 0.41%. So all of our markets were up last week, except the Russell. The Russell started to give us a bit of a rollover. The NASDAQ up 2%, but we did see at the end of the week a little bit of kind of slowing momentum. So when I look at these four markets, I really like to see. Okay, I did say it wrong. I apologize if I did that the wrong way. I did want to see. I typically like to see the Russell as the leader, followed by the NASDAQ, followed by the S&P, and then the Dow coming in last. And that's usually a picture of strong continuation. And now when we did this last week, what we saw was the picture that we had in front of us, was that continuation picture where there was the that ability for price to kind of continue that movement. And so as I'm looking at tonight, I think that we're starting to see a little bit of kind of slowing of momentum. And as that momentum slows down, I'm going to be a little bit less interested. In jumping on board longs prematurely, right? I'm still going to want to get in longs. And so looking at our equities market, starting with our 4-hour chart, what is my overall 4-hour trend direction? Looking at our small time frame, what's my 4-hour trend direction? All right. What's my 4-hour trend direction is still very much bullish, right? It's still very much up, telling me I do want to be a buyer. But I will say that we are seeing a bit of a slowing momentum, right? A lot of our oomph has been slowed down. A lot of the wind is coming out of our sails, if you will. And so whenever we see that happening, where the wind is coming out of our sails and our momentum is kind of slowed, what I want to consider is that we're going to be looking to see if small time frame demand areas start failing. Okay? Do small time frame demand areas start failing? So going to the 1-hour chart, we clearly can see that our momentum is really waning up here. And my next small time frame area of demand is the 15-minute level right down here, okay? And that's, because I could look at, I could certainly look, when I'm talking about clear areas of demand, I could certainly, looking down and to the left, I could come to right here. So this area is pretty good, and it's a bit of a speed candle. But below that, this is really not a super clean level. Matter of fact, it's probably pointing down to this as the origin of this move higher right through here. And so when I have that move right in there, I think that's going to be the one to take a look at as far as the one that I would be willing to go long. Now, but check this, is that I'm interested to see if it fails. Why am I interested to see if that level fails? Because if that level fails, then my slowing momentum is continued, is potentially gonna bring us back and swing us back the other way. Now, great question. Petra says we're also in daily supply, so it's to be expected. Yes, I would agree with that, Petra, for sure, with this supply area we have right here. Now, I will say this. We were in daily supply last Sunday as well with this area right here. And we were never able to get a lower low. And so no true reversal that showed up. And so now we're sitting at, as far as daily supply goes, this area right here. Now, what do we think about this daily supply? My gut says that this daily supply, and let me put a box around it so that everybody can kind of see the area I'm speaking of. Why don't I have a tremendous amount of confidence in this daily supply for going short? What would be my thing that would be my lack of confidence in this daily supply to go short? Petra says it's been retested. Yep, that's part of it. This little wick right here was clearly a retest of that level. Yeah, basing before the level. That's exactly it. To me, this is our KOD, right? All this right here is our kiss of death. So I think this level may give us a short-term move down, but that's really the kiss of death, is when you have a pullback, when you have basing before that level. Now, that typically makes those levels that much weaker. So when I'm looking at this, and let me get rid of this area, I think there's a good chance that we do pull back from here a little bit. But the question is, do we start blowing through smaller time frame demand? And if we blow through smaller time frame demand, then we may see a bit of a trend direction. Until then, there's really nothing to lean on. Okay? Now, from a supply above me, looking at the hourly supply above me, we've got two levels. This wick over wick area right here. We're basing in front of that level, so I'm going to remove it. And then this pivot right here, 45.58 by 45.70. To me, that's going to be your better level, although good but not great because of the slowing of momentum heading up into that region. So what I'm going to say is, on a 15-minute chart, you've got this area of demand down here. We could theoretically talk about utilizing this area right here. It was formed at 2:30 on a Friday afternoon. And it's a retest, in my mind, of some of this area over here to the left. And so, to me, none of this is true demand. None of it, okay? And poor time of day, didn't take out a prior swing high. Just a whole bunch of hot mess that goes on about this one. So I'm not going to utilize that. Now, what if you say, but Chuck, I'm aggressive, and I want to make a trade tonight. I want to trade tonight. I think we're going to keep dropping. Okay, if you want to be more aggressive, I don't hate this level right here, which was just created. I don't hate it at all. Matter of fact, I kind of like it. I think that's actually a pretty nice little potential retest area. If you want an intraday trading opportunity, that's ultimately what you're looking for here, is to say, is there an intraday trading opportunity and that I could take this evening? And you've got a very small level here with a very small amount of risk that might be worth you taking the trade. Now, technically, because we're still in an uptrend, that should be a confirmation entry. right? Should still be a confirmation entry because you're trading against the trend. But it's only 3 points wide, right? So if you want to take it, that's okay. It could be a bit of a retest of this wick over wick above. Ariel, I thought about that same thing, but ultimately that level, that little wick over wick is less than I think it's, how wide is that? Less than a point. And so since it's that small, now in my mind, your stop has to go, if you get in that short, your stop has to go above this wick, right? So your entry's in here, your stop is 45.34, giving you about 5 points worth of risk. Your first target would be right about here. Why am I taking this as my first target? 2-to-1 reward to risk, right? If I'm risking 5, I want to be able to make 10. So that is an opportunity to get in for those of you that are interested in a slightly more aggressive intraday trade this evening. All right. Let's move over to the NASDAQ. NASDAQ came into our demand level on Friday. Didn't really give us a great move out of that level. Hopefully nobody held it over the weekend. There's really no reason to do so. But notice we came into a demand level and we were unable to, not only were we unable to move out of that demand level with any strength, we were unable to eclipse and create a new high. So by being unable to create a new high, that further speaks to the weakness that the market is starting to show us, the lack of momentum. So with that being said, what I'm going to say is we're still long. There's no reason not to be, but boy, I'm being cautious about where I get long. And those levels have to be extremely good. So looking at here on the 1 hour chart, this has to be a confirmation entry because we've come close to it in the past without getting in. Okay. When we come that close without entering the position, I'm going to be a little bit more cautious of the level. And so that's got to be a confirmation. Where's my next quality demand? Well, I have a wick over wick right here that was retested by this long lower wick there. I've got an unbalanced wick over wick right here. Yeah, PJ, I will. An unbalanced wick over wick that exists right here, but the unbalanced wick over wick can be a good thing. So I will wrap my lines around it, and then let's go look at it on a 15. The downside of the unbalanced wick over wick levels is that they're usually not as high quality. And those ones that are not quite as high quality don't often give me a big turn. Combine that with the fact that we almost came into that level and are slowing momentum, it makes me very cautious of this area. When I say unbalanced wick over wick, Gary, what I mean is that my two wicks that I'm wrapping my lines around are not of the same size. In a perfect wick over wick scenario, the wicks of these two candles will be balanced and basically the same size. But this is an unbalanced session right here. And so let me take a look at that on a 15 and see if it gives me any insight. So what's interesting is when I go to the 15, I have a very clean wick over wick right here, which is not an unbalanced wick over wick. But notice that's where we bounced off of here and got the rally from that zone. So to me, that level can't be used again. I would actually come down to here. And in this case, the tightest level would be that right there. But your stop has to go below the pivot, right? In that case, your stop has to go below the pivot. So I don't think that this level makes a lot of sense for a potential long. Anybody else have thoughts on that? I'm in my brain, I'm going through. That's a big zone. Yeah. I mean, that's a 100-point zone, Liz, on a 15-minute chart, right? Because your stop is down here, 14,433 against 14,523, because your stop has to be below the base, the leg in candle. Remember that when we set stops, we do not just set stops outside of the zone. We don't just willy-nilly set stops wherever the heck we want. We set stops outside of the lowest wick of the leg in candle on our 15-minute time frame if we're day trading. So that's our tightest possible stop, or we set it below the closest pivot. Neither one of these I'm very comfortable with. So what I would say now is that tells me that we already have confirmed that we have slowing momentum on the way up. We've confirmed that our demand below us is not the greatest for a while. And so just be cautious of any opportunities for a long. Now, what if you want to do the same short that we just talked about in the NASDAQ or in the S&P? It would be this area right here, 14,731, 14,745. Ideally, your stop goes up here at 14,756 for a potential entry. Got to be purple because we're on a 15-minute chart. All right. So there's the Russell as well as the S&P. Now, looking at much, much bigger picture. All right, I want to go to much bigger picture for a few minutes. Specifically on the SPX. We talked about the fact last Sunday that we had closed above the 8-period exponential moving average. And so it was okay to start to get back into your longer term positions, right? We're using this as a bit of a guide. We are sitting, in my mind, at a very, very critical point. And the very critical point is above those two wicks. The market has to close above those two wicks for me to be convinced that we're going to continue to head higher. Now, I will tell you, and I make no bones about it, when I saw us coming down, not only was I hoping, I really was hoping that we would make it down this far, because this is a 20% drop in the market. I was really hoping to drop that far. We may not, and I'm okay with that, right? We did drop 20% in the NASDAQ, just not in the S&P. And so if the market tells me to get back in, I'm willing to get back in. So if you haven't already gotten back in and started to get back into some of your longer term positions, then if we get above this 45.90 and these wicks right here, I think it definitely makes sense to be willing to get back in. If you pulled out for fear of a larger, deeper pullback. I will tell you, I was really hoping for stuff to come back here. I was going to back up the Brinks truck to buy stuff. I'm just saying. All right, so sliding over real quick to the Russell 2000. The Russell showed us the most amount of weakness last week, actually being down for the week. You can see that it's really flattened out. We did have a move off this confirmation long, which turned into almost a 20-point move coming out of there. But for now, where's my next quality area of demand? Well, as I look at this and I look for my next quality area of demand, I look down and to the left. Well, that's just a retest of this area here because we just saw that. This is a retest of this little area right in here. Now, we've got a 15-minute level here marked. We don't see it on this chart, but we got a 15-minute level marked, but I'm on the hourly chart. So where's my next clean hourly level of demand? All right, when I'm looking at hourly levels where I believe the market can turn, that's my next clean level, is all the way down here at 1964. I don't have really, really clean hourly demand for quite a while. Yes, I have this, and I'm positive some of you are going to ask me about this. Put the actual drawing tool on. I'm positive some of you are going to say, yeah, but Chuck, what about that? And that's okay, good, but not great. And in my mind, it's a retest of itself because we came down, we came up, we came back down again, we came up. And so not a huge fan of that level. I just structurally, and I got two lower wicks that typically says, hey, demand is a bit lower than this. And this is the finger of all fingers pointing down to where demand is, which is right there. So what does that tell me? That tells me that I'm really, really cautious about any opportunities for longs in the Russell. And I'm more interested in the Russell for shorts than probably anything else. And so that same 15-minute entry that we liked in the S&P and the NASDAQ, you like it better in the Russell, okay? You like it better in the Russell as a way to get in. And I will tell you, if you get in, is it okay to hold that thing? Let's just say you get in and it drops and you get your 2-to-1 right away. Is it okay to hold it for more than that? Sure it does. Is it okay to hold it all week? Sure it is. It's great to make a little bit of money day trading. It's great to make a lot of money swing trading. That'll really make you feel good. And so when I look down and I see no clean areas of demand for quite a while, and I've got a very small time frame entry that gives me minimal exposure on the entry, then okay, I'm interested in it. PJ, that stop on the Russell would be, like I said earlier, outside of the leg-in candle heading into the area. Now, in this case, you've got a drop, base, drop. So your leg-in candle would be this one right here. So the absolute tightest your stop would be just above the high of this candle right there. And so that would be, what's our high on that candle? The high on that candle is 2073.2. So your stop could be just above there. If you want to give it more wiggle room, put your stop above the pivot. Put your stop above the pivot. You're still only talking about, what is that, 7 points. If you put your stop way the heck here above the pivot, it's still only 7 points worth of risk for an area where we just have no clean demand below us. Now, the argument, which somebody might say is, yeah, well, Chuck, but this looks like it could be forming a bit of a bull flag pattern. Great, you get stopped out. Oh, well, get stopped out. Let it keep running. Right, so Ariel, yeah, it's exactly what I'm talking about, Ariel. That's the argument is, well, what about a breakout to the upside? Possibly, but that's why our stop is as tight as it would be, right? Your stop is here. Let's say your stop is here. Let's say your stop is way the heck up here and you've got an 8-point stop. Well, let's take that back to the daily chart. That means that my stop is here. I still wouldn't get long on the 2100 until up above here. So there's still plenty of time to do that. If you guys have heard me once, I'll say it again. If you don't want to ever take losses, get out this game, right? You've got to be willing to take those small losses. But this is the one, those kind that I like taking. Calculated losses, calculated risks in order to get long. Yeah, for a swing position, Ariel, for sure. For sure. Okay, let's take a look at the Dow real quick. The Dow bounced off of the demand area right through here. But in all reality, yes, this was a great demand area. Are we making money on this trade? Probably not, because 1, 2, 3, 4, 5, 6 candles later, it hadn't started to move. And it's 8 o'clock at night. And so in reality, yes, it's a demand level, but it's probably not one most of us are going to make a whole lot of money on if we're following our 6 candle rule. Now, it did give you another retest the next morning and then rallied up from there a second time. This level's been hit twice. Think about it. To me, this is like leftovers you put in the fridge. You go back once and they taste okay. You go back a second time, they taste a little funky. If you go back a third time and they already tasted a little funky the second time, how do you think they're going to taste the third time? Not good. I don't care if it's grandma's meatballs. If it's funky, get rid of it. If you've gone to the leftovers twice, and the third time you're going into the leftovers, if grandma's meatballs are getting funky, get rid of them, no matter how good they are. And that's kind of what we have here with a level like this. It was a good level the first time. The second time it was okay. The third time I'm not interested. So what about the level above, this 34,496? Yeah, it's like the fly on the sushi. I'm not interested. Gary, we do. I'll go through that in a couple of minutes, if that's okay. Give me a couple minutes, and I'll go through where we place our rules, and we got a lot of rules, so it's good to kind of know and see where they are. So we have this area here, which has been come close to without getting in, thus forcing me to switch it to a confirmation entry. Now, when I go to the 4-hour, my 4-hour chart, definitely, I think, out of all of the markets, giving me the best case for that upside breakout. We talked a little bit about it in the Russell, but I think actually the Dow is the one that gives you the best pure case for the upside breakout above those highs. So I'm okay not taking, if that small time frame short doesn't work out, I think you've got a good upside breakout up here. I lost my appetite. Sorry. As long as it's not grandma's meatballs, you'll be fine. All right, so those are our equity markets. Let me go ahead and switch this back to the 60-minute. Let me zoom in so when I share this grid, everybody gets it. One of the things, if you guys are new here and it's your first time joining us, one of the things that we do is we do like to share our trade grids every night, every live session. And so the idea of sharing the trade grid is so that everybody gets a copy of our levels of demand and supply. And so I'm going to post it into both the Zoom chat as well as the YouTube chat. At least I'm trying to. Control V. Oh, wait, I'm posting in the wrong spot. Let's try this again. There we go. Great question. So Lady Ventura says, what would your stop be on the Russell shorts? So in my mind, the stop on the Russell shorts that probably makes the most sense is above the pivot up here. If you're really conservative and you want to be really tight, you can place your stop right there at 2073. But I think, above here at 2077. 2077 is probably your best stopping point. If you're really more conservative, you can place your stop at 2073. All right. And that's just one that might work out this evening. And it may not, right? We may trade into that and blow right through the dang thing. For the sake of it, let's see when we get up there, we'll throw a contract on and see what it does. All right. Let me. You put this in the grid, and then we'll move on. All right. So to recap summary on the 80-20 on the SPY, you're open to re-enter long cautiously, but really looking above. Correct. That is exactly, that's the way you put that is exactly what I believe. It's okay to get cautiously long on some things that are outperforming the market. But at this point, I'm not, I think if we get above the next swing high, then I think that you've got the better opportunity to get in above those two upper wicks. All right, very good. Oh, Lady Ventura says targets on the Russell as well. So targets on the Russell, you got to think about it on a 4-hour chart. Your first clean area of demand isn't really here down here until 2030. So I would say your first target is a 2-to-1 reward to risk, where you take a little bit of money off the table, and then move your stop to break even. And then in my mind, you got a target down here, but in reality, on a 1-hour chart, your next best level of demand isn't until 1964. So I would say, if you can, hold that thing all week. If you get in and it starts working, hold it. All right. So let's go next to taking a look at energies and metals, starting with crude oil. So we looked at crude last week, and we got a nice little move into a small supply area, moved away from there. Let me make this 15-minute charts because these show up better on the 15. Small little move off here, got a nice move away. Hit this area, got a little move away, but then blew through all of them Friday after that. So both of them got you a bit of an entry and then moved away pretty quickly. But now on our 4-hour, what's our 4-hour trend telling us? What is our 4-hour trend telling us? Meh. Meh is the word of the day, right? I would call this very meh. Little bit of a head and shoulders pattern. Anybody else see a little head and shoulders pattern formed here on that 4-hour time period? And so now, what is a head and shoulders pattern? A head and shoulders pattern in reality is what we're seeing is essentially an expanding kind of wedge pattern here. That's typically a bearish setup, right? That's usually what that is a bearish setup because you've got the rising neckline. And so when I look at this, I would then start to question, I don't know that I've got a great breakdown trade below here because remember, for a breakdown, what are my 3 rules? 3 rules on a breakdown. Number 1 is I need 3 touches. Number 2 is that I need room to roam. And number 3 is that I need basing just below the level, right? Those 3 are just above the level. In this case, it'd be a breakdown. So I've got 1 touch, and then I got a lot of noise over here to the left. I got just about 2 touches. And so I would need basing to occur inside of this area. Now, here's kind of what I think is probably going to happen. My guess is we're going to break through that in the overnights. And my question is, will we get a retest right around the London Open? Because if we get a retest right around the London Open for a short, that's your opportunity to get short. We're not really yet setting up for a downtrend, but breaking below those swing lows would do so. Now, the other thing to consider is that we were unable to put in a new swing high, clearing out any of these swing highs. And so if there is an opportunity to go short, similar to what we saw in the Russell and the S&P, there is this level right in here that was formed right after the market opened today, about an hour after the market opened. We got a pretty decent little sell-off, and price may come back up into here, giving you a good short opportunity. I will tell you from a setup structure, I like this way the heck up here. Do I think we're getting there tonight? Probably not. But that's the structure that I like, is a drop base drop just below a pivot high. Now, by the time we make it back up to there, the weakness of our trend may be very much in question. But I like that structure probably the best. From there, you certainly still have this area right here. There we go. Okay, look real quick. I want to throw a quick alert on here. Oh, don't tell me I'm going to miss this entry. I'll get nicked by a tick. All right, throw an alert up there just to keep me frosty. Looking at gold. So we talked last week about how we could guarantee gold to move. Liz, you didn't put on an iron condor, did you? Because we didn't really get much movement. We got a little bit of basing in here, but not a true entry for a basing opportunity. And then it just kind of hung around there and never really came back down. And so now on a 4-hour, what does our 4-hour tell us to do here? Right? Telling us probably don't do a whole lot, Chuck. You should probably just go do something else. Right. My 4-hour chart is telling me to go grab my Diablo driver and put a few balls into the water, because that's typically what I do best. So as it stands right now, there's nothing I'm going to add to my gold. I just don't think that gold really gives you a lot of great setups. Now, will we find something tomorrow? Probably. We'll probably find something on our daily market commentary sometime tomorrow morning after what happens with overnight trading. And if we get good overnight trading, then I'll put something out tomorrow morning on our morning video about opportunities. But as it stands right now, we got to come all the way back to this little base drop on a 15-minute chart, which is sitting up there at 1973 as our best opportunity, 1973 by 1977. Okay. Let's go to natural gas. So nat gas continuing to run higher. And we had a really nice breakout setup here. Breakout worked out really, really well, giving you kind of a longer term opportunity in there. We did get a retest back into this area, which also gave you another potential entry. And then we got on the 15-minute a pullback into a quality 15-minute entry with a move up. So all these demand levels, it's like boom, boom, boom. Like the demand levels just singing at you. And then we come right up into an area of supply. Well, what do we think about this supply area? Well, we're in it. It's a 1 hour level, excuse me. Right? It's a 1 hour level that we're sitting in. I got to go back more than 90 days. Is this the best of levels? It was the best of times. It was the worst of times. No, it's not the best of levels. Matter of fact, we pulled away from it. We retested it once. Then we pulled away again, turning this into a confirmation entry at best. It's now basing in front of the level. Don't short this thing. Just because we're sitting in a supply area doesn't mean you should short it. It's not a good supply area. It's not even an okay supply area. It's a crap supply area. It was a good supply level when it was created. But it's the way we based into it, the fact that it's the second time into it, I would say look for a pullback to a quality area of demand. Moving to the 15-minute chart, I am intrigued by this long wick because this long wick tells me we came all the way up and then all the way down, and now we've rallied back up. So what we see here is a drop base rally inside of a candlestick, inside of one 15-minute candlestick, which means it's probably a 5-minute level, but I'm not going down there, Ian. Not doing it. You can't make me. I don't look at 5-minute charts for those of you that are futures traders that are used to seeing people force trades on 5-minute charts and 2-minute charts and 1-minute charts and tick charts and all that stuff. If I don't see it on a 15, it's probably not going to be a great opportunity and a great session. So, all right. I would say that our best level, and I'm gonna wrap it in case it comes back to that area. Our best level is down here. Yeah, only refine trades on lower time frames. That's it. I can refine, but that's as far as I go. And I don't even refine less than a 15. And then copper. So looking at copper here real quick on a 4-hour chart. This is the noise that you see. We have created a new lower swing low and a clear lower swing high. So my 1-hour chart tells me that I should probably look to be a seller. The only problem with that is looking for clean supply on here is like looking for a needle in a stack of needles, especially with all these wicks pointing up. There's more needles in here. So going to a 15-minute, I do think you've got a really clean level right here. And that's probably the only one. But I think it's a good limit entry if price comes back up to there for a good short. Yeah, lots of Justin's fingers pointing up at supply above us. And so I think that's my best one. This one up here is probably okay, or it was okay, but it already got retouched, right? So beyond that, you come all the way up to here. All right. So that is our energies and metals. Any questions on energies and metals before I share the grid? Whether you're in the Zoom world or whether you're in the YouTube world watching the video, let me know if you've got any thoughts or any questions before we move along.
Hey, real quick, Chuck, what you think about silver?
Say it again?
Real quick, what you think about silver?
What do I think about silver? I don't know. Let's take a look at it. So taking a look at silver, let's go to, I don't look at it very often, so let's go to a 4-hour chart. We have I do have the permission to be a buyer, right? And so I'm going to look for higher swing highs, higher swing lows, then go to a 1-hour. When I move to a 1-hour time period, I see that I have a decent area of demand here right in front of 3 really big candlesticks. So this area here, and I say decent, not great, because there's a little noise over here to the left. I also see this area right here. Now, the level that's above has a stronger move away, not yet been touched. The level below also has a really decent move away, but not as strong as this one. This is actually even formed at a better time of day. So for now, I think this one's an okay zone. The thing that I would say about it is if we come back and retest that, then and we continue to go higher, then it doesn't break our uptrend. And as long as we don't base in front of the level. Now, the only thing that I would say about this is that it's like, who's all going to take this? Maybe everybody, because it's the origin of a big move up. Is that really a level that's going to be great? Now, also, where should you place your stop on this trade? Well, I think you got to place your stop down here. If you take this one, your stop has to go down here. You might say, well, Chuck, why does it have to go down there? Well, if you think about it, the leg in candle on this time period would be this one right here. So my stop would have to go below this pivot. And that means now that my risk is this distance and my reward as it stands right now would be about a 1-to-1 reward to risk, because this would be a quality area of supply. Does that make sense? And so that's my fear about that level. While I like it structurally, I like that you guys are talking about it's a bit too obvious, because it's kind of like here, Mousy, let me give you some cheese. And so while this level down here doesn't have the same strong move away, it's also below an area where you're going to get people that are selling below that line, and it's a bit of a trap area. So I like this area down here for silver as a better entry. Does that make sense? 24.94 by 24.87. Good. Love it. Thank you, Mr. Dion. All right. Let me go back to my chart here. Share this one out. All right. Put this in the chat window. Put this in the YouTube chat window. And put it on the trade update worksheet. Now, we have not really found much in ags lately, so I do want to go into ags here in just a minute, because I think it's going to be important to take a look at those. But I don't know that there's going to be a whole lot of opportunity in there. Just looking at this, right? We talked about this last week. You actually can still see my boxes from last week. What has changed from last week? What has changed? Not a dang thing, right? Nothing. Nothing has changed. All we've done is continued to be in a sideways price action. There is really, in my mind, no reason to attempt to trade this. I think that this is way too risky. Does anybody have any thoughts on that? Any questions? Anything to add? I mean, I'm willing to discuss it if somebody wants to discuss it. Soy does have a little bit, but then we just came back down to this low right here. So soy could be like, it could be the first one to come out of this sideways price action, I'm just not sure if or when it's going to do that, and so that's why I don't think it makes sense to trade it. So the only thing about soy that I say you might be able to look at is a breakdown below here, because we got a 1 touch, 2 touch, 3 touch. So you could look at a breakdown below here in soy. The problem with that breakdown, let me get rid of this real quick. The problem with that breakdown is that you've got some demand right here. So I'd have to make sure that I've got enough room to roam to make that thing make sense. And so while soy would be the only one that I think is worth considering, it would only be as a breakdown to that next area of demand. I think that all of it is something that's not worth trading. Questions? All right, let me share that grid out as well in the YouTube land. Yes, that's actually just what I was going to get to, Gary. So real quick, I know there's a lot of you that are not full-fledged members, and you guys are here kind of for the free week. And this is our last session of the free weekly preview of the week of the preview week. We opened everything up to you. Here's really what it comes down to. We're, I think, $149 a month. If we can't help you make $150 a month, you probably shouldn't be a member. That's what our job is to do, is to help you as best we can. And frankly, you know, the people say, well, what's different about what you guys do and everybody else? I hope it's that we give a crap. I mean, I really, really hope that. So those of you that are interested, you know, we shut everything off as of tonight. So go become a member. We'd love to have you full time coming on board. Now, when you do come on board, go to the area that says student resources. And in student resources, you have a pro member community lobby. And so, absolutely, Vince, you certainly can have the mic. I'd love to.
Thanks, Chuck. Happy Sunday. Hope it's a blessed weekend for you.
Awesome.
But man, I cannot make a stronger testimonial for you and Corey. I don't think there is an organization that is more vested in my financial health than you guys. And I joined Thanksgiving a few years ago. I said I was thankful I found you, and that thought remains absolutely true to this day.
Awesome, man. I appreciate it.
Yeah, you bet. Thank you for what you do. And man, I just hope to see like hundreds of people in these trade rooms really soon. So go, Chuck, go, man.
You rock. Appreciate it, man.
You bet.
So here's where you go for all of the rules and all that information. So if you go underneath charts and planning worksheet, and also my documents and downloads. So I will say that in the preview week, I don't know that you guys have had access to all of the my downloads. I think we kind of kept those behind the curtain for a little bit. But in here is where you've got your trade planning tools. All of our rules for increasing probability, lowering risk, and increasing reward potential, trade operation plan for breakouts, trade operation plan for reversals, and then also some of our custom indicators that we've created for Thinkorswim, and some of the options trade tools that we have in place. So here's a lot of the rules. The other place that you're going to find a lot of the rules around what we do is underneath the OnDemand Trading Courses, primarily under the Advanced Price Study. So in here is where you'll find things like the 6-candle rule, stop loss, and target placement. I think that's really where you'll find a lot of that stuff. So if you guys need anything, make sure you shoot us a text. The way to contact us is super easy. Just shoot us a text, 973-348-5022, and we are here to help you. So that's my short plug for those of you that are on our trial week. And now I'm going to move on and continue. All right. So, and hopefully that answers your question of where you can find all of the rules, Gary. And Gary, if you need anything, yeah, I'll type the number in. It's 973-348-5022. And I'm not typing because the number lock's not on. And it's up at the top left-hand corner of the website. When you go to the actual website, you can see it up in the top left-hand corner. It's kind of hard to see on mine because I'm on the editing side, but it's underneath up here at the top where you can't see it, of course. 973-348-5022. That's the number. All right. So let's go ahead and move into bonds and currencies. So moving over to bonds and currencies. Awesome. Well, glad, Gary. Glad Corey and I know that place where you probably know Corey from too. Most of you guys don't. A lot of people that are newer here don't realize that I had a long tenured history there, and so we can talk about it over a drink one day. All right. So looking here at a 1 hour time period on the bonds, our bond trend continues to be down. We talked about a breakdown trade here. Unfortunately, we did not get quality basing to get us an entry on a breakdown. There was no good solid breakdown entry for this. So, what is this? Why is this doing this? There was no clear breakdown entry in here. And so what I would look for is a retest back up to this origin of this move down. So let me get rid of this breakdown line because we didn't get basing. The origin back to here is the best way to go. Now, if we move to a 15-minute chart, I'm going to actually take this and I'm going to change this. And I'm going to make it a 15-minute level, and I'm going to make it the less obvious entry. The less obvious entry is going to be this noisy cricket right here. I call a wick over wick level on a 15-minute chart a noisy cricket. That to me is your better entry. Now your stop still has to go up here, but this could be, those zones that you sometimes look at that you almost get filled and then it just moves away from you. That's the fear, is that you almost get filled and then it just moves away from you. And so we want to make sure that in that instance you're getting a good opportunity for a reversal right up in there. So I think that's a good level on the 10-year treasury note. What about a long? Don't even think about a long. Just forget it right now. Absolutely forget it. This bond price is just right. I mean, we go back to a longer term chart. The bond prices have been falling for quite a while. And I just don't see a really strong buying opportunity for quite some time, right? You've really got to look. If I just take this and extend it to the left, well, let's take where we are and extend that blue line to the left. We got to get below the blue line. So now, as we get below the blue line, and I start looking at quality demand, I would say that your next quality demand is probably down here. And that's taken us back to December of 2018 is our closest area where we have any decent demand. So don't even look for a long. Try to find shorts. Wait for price to come back up here. This to me is the noisy cricket level. If we rally, and remember, this is speed candle. Speed candles do tend to get retraced. The question is, are they going to go all the way? Yeah, buying is kryptonite. I mean, just don't try to pick the bottom. That's what I would say. The 30-year looks much the same. Although this wick over wick is a bit unbalanced. So this one's more of an unbalanced wick over wick. So I like the 10-year much better than the 30-year. All right, let's go take a look at the euro. So looking at the euro, man, we just really, really wanted to break out of this level, didn't we? We still want to break out of this level. So if I get some basing, I'd be very comfortable saying short that pig. If we get some basing, getting below that level. If this red candle continues, which we've only got 4 minutes left, but let's say this red candle continues down, then very similar to what we have in the bonds, it becomes a speed candle and you get a retest right here. Moving to a 4 hour. I mean, that's really the only play. I don't see a lot of another play for that. I think that's probably the best way to go. Is the breakdown below 1099. If this breakdown occurs without 1 or 2 more candles of basing, then you got to retest short up into here. And unfortunately, for those of us that are in the U.S., that may happen while our heads are on the pillow. And so you might want to take that trade. If you're trading in another part of the world, it might happen right around the London Open. So just keep an eye on that. The Canadian dollar. So in our Canadian dollar, we do have a bit of an upward trend. Continued growth in here. We got above, we're sitting right below here. We got above this pivot last week, and then we've got above this supply right here. And so now we've got one more level of, one more hurdle to mount, if you will. And so you're looking at longs on a quality pullback. I know we have this area down here marked. I'm actually going to move it to here. And the reason I'm moving it to here is because, and the devil's in the details. It's that little wick right there that makes, in my mind, all the difference. And that little wick tells me we came up, we came back down, and then we exploded out of that area. And so that, to me, now also combine that with the fact that if I were to simply extend this line to the left, old resistance oftentimes acts as new support. So if I have more people placing that trade because old resistance acts as new support inside that level, that could be a pretty good reversal for price to move higher. All right, so let me share this grid out. Yeah, Trent, let me do that in one moment here. I will look at the 15-minute version of that. All right, let me slide this to the 15-minute. Trent, why'd you do that to me? It's not as pretty on a 15, is it? I really like it on the hourly, and I didn't like it as much on the 15 because it looks as though it has been retested. I'm going to refine it by making it a confirmation entry is what I'm going to do. Thank you for that. Good catch. Great catch, actually. It changes, it does change the game in my mind. It makes it a confirmation entry. So, speaking of alerts, where the heck are we in our Russell setup? Oh, come on. Really? Really? That's frustrating, isn't it? Damn it. Darn it. I mean, sorry. That's frustrating. Did anybody wind up just getting in anyway? Because you were only a few ticks away. I know some people may have just gotten in anyway. I did not because I refused to force my levels, but man, that sucks. Oh well. It is what it is. These things happen. Husa. Yeah, I missed it too. And frankly, I should miss it, right? There's no reason for me to get in without it hitting my zone. It's like you know, the analogy I use is you're setting a trap in the woods, and you set a trap for an animal, and the animal might sniff around the trap, but they don't go in it. And if they don't go in it, you don't get your order filled. So, yeah, Gary, I'd still be willing to get in if we come back to it. I'm going to keep the alert here because based on any basing that comes into the area, it might have to switch to a confirmation. All right. So let's go take a look at bonds and currencies part 2. Wow, what does that New Zealand dollar chart tell me to do? It's like that 80s song, look away, baby, look away. Don't look at me. I don't want you to see me this way. I quote way too many songs. Yeah, I mean, we could theoretically get a breakout up above here. I'd hate to take a breakout below because I don't have room to roam. I lose my room to roam. So I like the breakout above, but that's, you know, I don't know when or if that's going to occur. I do still think this is a pretty good demand area right here. It's just hasn't been there to see it in a while. Great British Pound. That supply level was like a kiss and go. I'll remove a lot of this noise here. You know, we're sitting above a 1-hour demand, which is an unbalanced wick over wick, and we're basing a bit in front of it. Not a ton, but we definitely have potential supply here in front of it heading into the open. So, I'm going to remove that. I don't trust that. I don't trust that. I trust that like so many bad analogies I can use there. I just don't trust it. I think we could see a breakdown. My problem with a breakdown, Ariel, is that demand still exists. And so it could become a bit of a trap as well. So I don't like that demand well enough to go long on it, but I also feel like that demand could be strong enough to stifle my short. Here's what I would be most afraid of. Would be this happening. I take a breakdown here, we get a move back up, and it stops me out, and then it comes to here, and then it goes the way I thought it was going to go anyway. That's really the play I'd like to see happen. Now, is it going to happen? We'll see. I don't know. I can't control it, clearly. All right. Japanese yen. Please, for the love of God, stop trying to buy the yen. Stop trying to buy the yen. It's going to keep falling until it stops. When's it going to stop? Don't know. Nobody knows. Just wait for a breakdown. I think you got a great breakdown here setting up in the yen. It's almost the same as last week's breakdown. Did anybody, by the way, hold last week's breakdown all the way till Friday? Because that was the trade of the week. The trade of the week was taking the breakdown in the yen and holding it all the way through to Friday. We could have it again. I don't know that we will, but my point is please don't try to pick the bottom and buy it. All right, I'm off my horse. So the Aussie, looking here at our 4-hour chart, this is a great picture of what slowing momentum looks like. Looking at slowing momentum, right? You literally, it's showing you what slowing momentum looks like. Now I could add an indicator on here. Let's throw the RSI on here as an example. My highs are still getting higher. My highs are the same through here, and then they're lower, right? So the RSI is showing me a slowing of momentum. My MACD is definitely showing a slowing of momentum. MACD, RSI, they do a really good job of showing momentum. And so what we're looking at here is divergence. Now, that being said, can we get slowing momentum and still break out to the upside? Absolutely. We certainly can still have a breakout here to the upside, in which case this supply above me would be considered a confirmation entry at best, probably a target for an upside breakout above here. Realistically, I think that we're going to start to see some of these demand levels below us falter. And if the demand levels below us falter, then in my mind, you really don't have any quality demand until here. I'm going to get rid of this one altogether. Thank you for answering, Roberto, Liz. Yeah, FCY, but not overly. And none of those are overly liquid. They all have gapping pictures on an intraday chart for sure. Yeah, FXY. FXY, like FX, because there's FX, there's, is it FXY? I thought, it is FXY. FX, it's not FXJ. Like, yeah, there's the FXE, there's the FXB, there's the FXM. There's lots of those FX ETFs that you can certainly use. And those actually work really well as hedges against the dollar. Those are what those are really good for, because when you look at something like the FXY on a weekly chart, right? And if I put that right next to the yen itself, on a weekly chart, Let's start them both at exactly 2019. So we're looking at apples to apples. You'll notice that they're pretty much identical, right? So if you're going to hold it as an investor, as a hedge or something like that, that's where I think it works best. All right. Any questions on that? That's a good question, Roberto. I like it. But those, the FXY, the FXB, the FXJ, those are all really, really good ETFs to take advantage of some of these movements. All right, let me share this one out. All right, let me put this in the trade grid as well as on the YouTube page. EWJ. Well, I think EWJ is, if I'm not mistaken, I thought it was, put this to a weekly chart. I don't think the EWJ, I think, is of the Japanese markets, not the it's the Japan ETF. So like I used to trade the EWZ, which is the Brazil markets ETF. That's actually one that I really, really liked for quite a while. And so yeah, EWJ is like the EWs are the iShares of other indexes, essentially. Not anymore. Okay, I haven't looked at it. So yeah, I haven't. I will tell you, I haven't traded these in a really long time, so I'm maybe a little bit out of the loop on that. So, all right, everybody. Well, that's all I have for this evening. If you guys have any questions, please don't hesitate to reach out, give us a call, shoot us an email, smoke signal, whatever you want to do. I appreciate you guys that joined us for the free week. Even if you don't become members, we're still here to help you anytime. Please don't hesitate to reach out. That's what we're here for, and just send us a text, shoot us an email. We're here to help. Love to have you join us. Everybody else, I'll see you in the morning. Actually, Herman will see you in the morning with his live trade room, and then call me if you need something. Talk to you soon, everybody. See ya.